All right, welcome everybody. Hope we had a long extended weekend, and for parents out there with kids, week off from school. Um, yeah, I'm going to be here. I'm not going anywhere this February break, so we'll be on for the this week's entirety. And yeah, be doing the radio show this weekend. I know a lot of people taking off, a lot of ski vacations. It is what it is, but there's a lot of things going on this week, and I really wanted to stay on top of it and go over everything. I got a lot of what we call economic cross currents, and you read various different stories in the news, economic numbers that are coming out, headlines in regards to autos, headlines in regards to consumer spending, real estate. We're going to get into all of that, and they kind of pull you in a myriad of different directions. Not to mention all the talking heads out there trying to guess what the Federal Reserve is going to do next and how that's going to play out in the markets. You've got major stock analysts out there predicting, market sell-offs and guesses. And we're actually going to give you our market prediction in a little bit. But let's go over some of these highlights here. Household debt is up to its highest level since the 2008 financial crisis. The average household owed total of $142,860 at the end of 2022. They're saying this has to do with mortgages, high inflation, rising interest rates, household debt, which increased by $320 billion in the final 3 months of 2022, hit a 15-year high of $17 trillion. On average, a typical household total of $142,000 at the end of the year. And again, it depends on what type of debt that is. You got to get the breakdown. Again, mortgage debt is one thing. We talked at length here about obviously not becoming house poor, but obviously you have some equity in that. And then there's, credit card debt, which is a completely different animal. Auto debt. Again, price of a new car, and we'll get into that in a bit, has skyrocketed. And how is that going to play out when it comes to the Fed and the Fed's target to get inflation down to 2%? Well, I don't see that happening. I don't. Again, a couple stories here on autos that, again, cross currents, things that you find fascinating. A shiny new car is out of reach for many Americans. New vehicle affordability continues to soar as high interest rates and soaring monthly payments have prevented many middle-class folks from owning a shiny new car. The Cox Automotive Moody's Analytics Vehicle Affordability Index shows new vehicle affordability hit a record low in 2022. Then you see some of the average price of certain cars. Mercedes-Benz, for example, their average vehicle price is up by 43%. Now, for a period of time, you had Mercedes-Benz, BMW as well enter into the it was basically the starter luxury car, if you want to call it that. They had Mercedes-Benz, they had BMWs out there that were priced at a much better level. Used to be, Mercedes-Benz, when I was growing up, rich people. That's it. Rich people. Mercedes-Benz, BMW. Then all of a sudden you start seeing them everywhere. And I found it fascinating, and we broke this down for people here because there's always there's some question when it comes to you don't want to lower the level of your brand because you're selling a certain thing. For example, you don't find sales taking place at Louis Vuitton. You don't find sales taking place at Gucci. They keep their price up for a reason. That's what they are. That's what they do. And for a long period of time, it's certain automakers doing the exact same thing. However, when you bring in CAFE standards, where you're going to get penalized if your overall fuel efficiency mile per gallon does not fall in line with the government wants, you're going to get penalized. And that's why many of these car companies said, okay, we've got to be making smaller, more affordable, more fuel efficient cars so we don't get whacked upside the head. They still paid the penalty. The German auto manufacturers, they still paid a penalty, but it wasn't as bad. I did the same thing when we had the auto bailouts and everybody was getting very upset. We just bailed out the automakers, which I disagreed with. They should have just gone away and then they would have come back in some way, shape, manner, or form. They were all upset because all of a sudden these auto companies were taking taxpayer dollars and opening up factories in Mexico. I'm saying, well, what cars are they making in Mexico? They're making Ford Fiesta, that car with the bicycle tires that Ford has to make, not because it wants to make it. It's because it has to meet government standards for its entire fleet. Well, guess what? Guess what? You got to make those cafe standards. You're going to do it doing what now? Electric cars. Electric cars, not cheap. Not cheap. So you're going to throw a lot of this by the wayside. It's going to happen. You take a look at these cafe standards. They keep saying, okay, the price of electric vehicles are going to come down, but all the auto companies are going to be facing this. And again, cars are going to continue to be very, very expensive because of this. You're not going to make it expensive. Why? You're not. Doesn't make any sense to. You're in the business of making money. And again, you have to play by the government's rules. Much of this, let's go conspiracy theory here, by design. It's by design. I think that the grand desire is to, the left, the green movement, they don't want people in cars. They want them on public transportation. And again, I for one, I have nothing against public transportation if it makes sense. Again, I lived in New York City, lived in Manhattan for 10 years, didn't own a car. It's stupid to own a car. Friends of mine, I got to get a car. For what? For what? So you can leave it in a parking lot? Oh, you're not taking your car to work. You're going to, take a cab. You're going to get in the subway. You're going to get on a bus. What, so you can go away on the weekend from time to time? Maybe drive out to the Costco in Brooklyn? No. Stupid. But again, to each his own. It makes sense in certain places. We've talked about this in terms of rail here in this country. And how Northeast Corridor works and many of these other areas don't. Florida actually now has a rail line that they continue to expand that's private. Love it. Fantastic. That's what I like. Got to show a profit. Have to make money. Anyway, we're now starting to see more auto payments coming in late. 9.3% of auto loans extended to people with low credit scores were 30 or more days behind on payments at the end of last year. That's the highest share since 2010. People with low credit scores, meaning that they've been paying a higher interest rate the entire time. So the companies, they price the risk into this. And guess what? Guess what? You don't pay, they're going to take the car. And even though used car prices have come down to some degree, they're still elevated. I remember, I don't know if you recall this, there was commercials that used to run all the time. It was, I'd have to say probably around 2005, 2006, 2007, Mitsubishi, the automaker, they started promoting this car. I forget what the hell the name of it was, but it was, young people in the car playing music and dancing around. And it became this hip new car that they let anybody walk in. They were just, there you go. You want the car? Fine. They didn't do a check. The whole freaking thing was a house of cards and fell apart. But, this is the reality that's going to happen. And again, you talk about what I just mentioned, the higher price, the higher price of automobiles. Again, what can the Fed do about that? This is going to be a part of inflation, right? It's going to be a part of inflation. What in the world is the Fed going to? They can't do anything about this. Again, it's going to be very hard when you have the government getting involved in the free market, which it does to a great extent, and most certainly is getting involved when it comes to transportation, cars, cafe standards. How do you get that price down? You're gonna force car makers to make inexpensive cars? That's new. I mean, you force them to. Well, you did that before with the cafe standards, but now they figured out, oh crap, we can make more expensive electric cars and fly under the radar on the rules. Again, they're going to make more money. It's more profitable for them. This is a better business model for them with the electric vehicles. It is. Anyway, persistent inflation keeping grocery store prices high for consumers. Bureau of Labor Statistics to price index January release last week showed that prices for food at home, the classification for food bought at the store to be prepared at home, were up 11.3% compared to last year. That's well above the overall inflation number, which came in at 6.4%. Again, this is what I said, that when people are feeling that they say the economy is terrible and bad, it's because of this. It's because of what you have to spend on the necessities of life. And this has been an ongoing theme. We've talked about this for some time here. Certain aspects of this, and quite frankly, it's been my belief system. This is, again, it's government. How in the world is the Fed going to do this? And you'll see economists and people out there, well, the Fed's got more work to do. Look at the inflation on food. Let me get this straight. You're going to starve people? I mean, people have to eat. It's not something that they can go without. They're going to have to eat. The only way you deal with food inflation is either, yes, you can either starve people, or guess what? Increase the supply. Do you want choice A or do you want choice B? I'm going to go with choice B. I'm going to work to get the government out of the way and try to increase supply. I'm not big on going out there and starving people. Yeah, it worked for Joseph Stalin. Yeah, it worked for Stalin had to do that, but it just seems kind of un-American to me. Office landlord defaults are escalating as lenders brace for more distress. See, I told you so moment. 10,742 or 3. I don't know where we're at this point in time, but yeah, we told you exactly what was going to happen. This is going to continue. You're going to have a lot of these real estate groups out there that they know how to structure this stuff where they'll just turn the keys in. They're protected themselves. Real estate laws it's fascinating how that entire market works if you know what you're doing and you know how to play the game and the taxes. But giant investment manager Brookfield Asset Management recently defaulted on a total of over $750 million in debt for a pair of 52-story towers in Los Angeles. Yep. Another company's in talks of credit. This is at 61 Broadway down in the financial district. And you're seeing these things again and again and again and again and again. Again, the way that they structure these things makes it difficult. You're not going to go after these big asset companies. Can't. They're protected from this. But what's going to happen to these buildings? Sure, you're going to get. You're going to have certain buildings, certain properties that are brand new, that have all the amenities. That's where everyone is going to go to. Okay, that's where everybody's going to head. You remember Mad Men? Okay, one of my opinion, one of my favorite television shows. AMC put that out. It's a brilliant program. And again, you go back to starts in the 50s, 60s, goes into the 70s, and you take a look at office life at that point in time and how offices were structured and put together. Hell, I can even go to the first office that I worked at, a couple of them. I mean, the office space in Rockefeller Center is old. It's old. That was the first office old. I mean, I bet you that place is practically, I don't even think it's half full at this point in time. Sure, you're going to get some of the retail down at the bottom that they can charge an arm and a leg for. Again, and those buildings are old. I don't know how they're levered up or how they're structured at this point in time, but Companies they don't want low ceilings. It's a different environment now. You don't have a zillion secretaries and assistants and office staff to handle everything. I go back to when I started in this industry. The support staff that was needed to run an operation compared to what it is today, due to technology and efficiency, that you can't compare. So again, businesses are looking for something completely different. So all of these old offices and the design, companies are like, we're cutting down on the amount of people that we're sending in. They say right now they're about 50% occupancy. You think that that there's not going to be even a greater fallout due to this? Yeah, it's going to get worse instead of better in many of these urban areas. It's the reality of the situation. I know certain companies are we got to have you back into work for a certain amount of days of the week. Yeah. Some of the financial companies in New York, maybe. But again, also many of these financial companies that are based in New York now have offices in other states. And, you come in and boss, hey, boss, I don't want to be here anymore. I want to transfer down to Palm Beach. I want to transfer to Tampa or Nashville, whatever it may be. It's going to be an option. I mean, not so much if you're going to be, low on the totem pole and working your way up, but many companies, it saves them money. So that's not going to change. Again, another cross current that's happening right now. Then you see stories like this. Investors worrying about too hot of an economy will put the Fed on a more aggressive rate path. The U.S. economy doesn't look anywhere close to a recession. Well, again, an NBER recession where you have to have unemployment go through the roof. No, it doesn't look anywhere close. But a textbook recession with 2 quarters of negative economic growth, again, not right now. Could it happen this year? Absolutely. But really, the Fed would really have to wreck the economy to drive unemployment up to the levels that, again, many economists are calling for. And again, I think that they're sadistic. I think that this is kind of evil. So you want the Federal Reserve, in order to tame inflation, you want to put people on the unemployment rolls. You want to put them on food stamps. How is that productive? Isn't there a better way to the proverbial way to skin this cat? Anyway, investors are starting to worry that may ultimately be bad news for markets. Wall Street spent much the past several months hoping the Fed would be able to pull off a soft landing. Evidence of the economy's resilience, coupled with signs that inflation has been moderating, helped bonds and risky assets like stock take off at the beginning of the year. But a string of hot data has convinced investors that there may be no landing. 2 separate inflation readings, again, we talked about last week, showed both consumer and producer prices were up more than economists had expected. Retail sales posted their biggest monthly gain in 2 years. Again, that's also because of inflation. And the labor market has remained robust. Again, can the Fed fix that? No, they can't fix that. They can wreck everything and then start over again. It doesn't make much sense to me. But I'm here on the program, we go over these cross currents, telling you what's going on. We deal with the terrain. Okay, try to put all of the narratives aside. So predictions. And here I think of the word prediction. I think of Mr. T in Rocky III when the sports reporter asked him, what are your predictions for the fight? He's like, prediction? Pain. Anyway. For the overall markets, just call it pain. For certain people, maybe, that have a tough time, again, seeing the forest for the trees and understanding what the markets are. Yeah, it's going to be painful for them. Not so painful for people who are smart. I think we're going to see continued churn moving forward? Yeah, I think it's going to be, we had a great first month out of the year, but I don't really expect much over the next several months. But again, it doesn't change anything. If I was to tell you, I'd tell you this. What I wanted. I said, I think the markets are probably could sell off based upon certain economic conditions. Say, I'm telling you this. Markets, I think, could sell off. How much? Ah, we'll play it. We'll say they go back to October, but they were back in October. It's what, maybe 15, 20% move to the downside. And it does it over, let's say, the next 4 to 5 months. Then, things turn like they inevitably do. And then into 2024, we see new highs. What do you do? What do you do? Did you listen to me and say, "Ooh, boy, that Markowski, he's smart. He knows what the markets are going to do," and you try to trade that? No. I'm going to tell you what my prediction that I just gave you is worth. Nothing. I could be wrong. You see, that's the difference. I learned long time ago that I just not capable of doing that. I know that's the game. That's what they want you to believe. All these guys on TV, they want you to believe that they're capable of doing these things, but they're not. Everyone's situation, I say it again, is unique and different. And because everyone's situation is unique and different, needs to be handled as such. And I take a look at some of these short-term treasuries and instruments out there that are great for, my son Nicholas's college money. He's got another year and a half before he goes to college. I don't need the money yet. Everything is based upon your time frame and when you need to have access to that money, when you're planning on using it. You don't want to be looking at your portfolio every single month and trying to decide what you're going to sell in order to pay the bills. That's not prudent. That's not smart. Last thing in the world you want to do. So, what is your situation? What is your time frame? Again, what if I'm wrong? What if my prediction is wrong? What if the Fed decides, took another look at the data, and they actually wisened up and they said, we can't fix this inflation thing. It has to be done out of Washington, D.C. We want to increase investment in these areas where we can increase supply. And all of a sudden, the markets take off like a rocket. Well, you sold, you missed it. What if I'm wrong in the sense that, guess what? The markets stay down for a longer period of time and that they don't recuperate until the latter half of, let's say, 2024. Again, you're trying to guess what's going to happen. That, for all intents and purposes, that's short term. These are short term numbers, and again, this is why I do not try to play them. And I go back to the Great Recession, financial crisis, 2008, 2009, and how long that played out for, and how into February, into March, and then all of a sudden it stopped. It stopped and it turned. And, things went in the opposite direction, and we had a weak economy over that entire period of time. Do I think that we're going to have a tick up later on this year into next year, capital expenditures, investment? Yeah, I do. But again, you take all of this and you also couple it with all the geopolitical things that are happening right now and issues out there. Well, yeah, you got to factor that into consideration as well. But that's always been the case. Always been the case. It's not new. It's not different. Anyway, let's take a look at there's a couple numbers. Again, today, Walmart, they're talking about, they beat on earnings by 20 cents a share. This fiscal fourth quarter that ended January 31st. Revenue blew it away too. But again, they're issuing a bit of a cautious outlook moving forward. I'd do the exact same thing if I was a CEO. do the exact same thing. You're going to try to be as conservative can be with what you're going to estimate, and then you're going to go out there and you're going to beat it. What you're going to do. Home Depot today beat on earnings by 2 cents. However, revenue was down, and both of these stocks are under pressure. Again, timestamp the show. It's 10:15 a.m. Eastern time. And again, I don't see much of a change over the course of the day, but it could. I don't know. All I know is both of these companies they're pretty well positioned. They run pretty darn good businesses. And depending on your situation, they may or may not need to be a part of your portfolio. Again, I don't know you. Don't know you yet. Anyway, this is a big story right now when it comes to tech. There's this internet rule that came out, I think it was 1996, if I'm not mistaken, 1996, Section 230. And under this rule, 1996, again, think of the internet in 1996. Okay, Mark Zuckerberg was 11 years old. Internet platforms can't be treated as the publisher or speaker of information provided by their users. So if a restaurant is defamed on Yelp or Facebook or Twitter, the party who is legally liable is the author of the malicious review, not the website. Again, town square. How can a town square be liable for some idiot going down to the corner and saying anything? That makes sense. However, this was before algorithms. And the argument is being made is that these internet platforms utilize algorithms in how they go about presenting conduct and what gets seen and what doesn't get seen. So that, for all intents and purposes, makes them a publisher. That's what we're dealing with right now. I always side on, and as far as caution is concerned, with regulators and the government getting involved in free speech. I always do. I've said years ago, I think that there's ways you could clean up social media, and they're not that hard. Not that hard. And get rid of all of the fake accounts. You have to verify who you are. Verify who you are. You want to join a gym? You have to, show ID. You have to give them information. You have to verify who you are. Get rid of all this anonymous crap that's out there. Then, people can actually be held responsible for what they're saying. But again, in the drive for, advertising and more clicks and more views, the social media companies have been hesitant to do that. Now, interestingly enough, you had Elon Musk and Twitter come out and talk about paying for a blue check being verified. And Facebook, Meta, just said that they're going to be doing the same thing. Do I think it will help? Yes. I think also the concern is by certain people out there is, how these algorithms are used, how they're manipulated. Again, I'm being honest with you. Again, I'm now doing our vlog. If you're watching this now, you might be listening to this on a podcast, trying to figure it out. Again, I want as many people as possible to see the work that we put out on a daily basis. And, you have to figure out how the algorithms work. And you got to do search engine optimization and put things behind on the website. It's quite frankly, it's a real pain in the ass. It is. I almost wish they get completely rid of that and you just pay. You want to get in front of X amount. You can do that too. You can boost posts, but rules that you have to apply by. Let me give you an example. I do every day. I've been doing this for a decade and a half, 2 decades now. Money Minutes. Go out to certain radio stations around the country. The nature of radio has changed. Radio's not the same. It is what it is. You're not getting the type of listenership that you had in the past. Not even close. But anyway, doing that, and I also post the money minutes on our YouTube station, WatchDog on Wall Street YouTube station, in these things that they call shorts. Okay, going short, fine. But if I go over by 1 second, if it's a minute one, gets kicked out. You're not going to get the type of play that you're not going to get the views because of it. I don't know how the algorithms work. I really don't, but I understand people's concerns with that. It's going to be an interesting Supreme Court case. They're actually calling this section, some people calling this Section 230 the Magna Carta for the internet. I don't know. We'll see. We'll see. Let's shift a little bit to some geopolitical things. Obviously, big story this weekend. Joe Biden President's Day goes to the Ukraine. Again, like clockwork, media was, oh, this is awesome. This is great. This is so brave. This is fantastic. All this stuff. Okay, if you think so, that's your opinion. Everybody's entitled to their opinion. And I remember them talking about, oh my God, air raid sirens were over Kiev. Yeah, it was a fugazi. Okay, they ran that on purpose for drama purposes. Again, it's politics, wag the dog type stuff. But promising another $500 million in aid as we continue to pour money into the Ukraine, and you get both. This is what makes me nervous with all of our conflicts and wars. When they get going, when they have both sides of the aisle come together in regards to their support for war, whether it be, our foray into Afghanistan for a period of time or Iraq. I mean, if you do remember, if you recall, the Democrats in the Senate at the time, they demanded that they come back and hold a session because they wanted to go on record as voting in favor of going to war in Iraq. And Hillary Clinton being a part of that crew back in the day. So you get the editorial boards from various different newspapers talk about how awesome this is and, what we need to do. And now there's the issue with China and how I guess we drew some sort of diplomatic, they're calling it red line. Last time we used the red line, that was chemical weapons in Syria, and we let it slide. So I don't know whether that this red line thing is going to happen or not. The concern is whether or not China is going to start supplying Russia with weapons. Whether they're going to start supplying Russia with weapons to be utilized in the Ukraine. Zelensky's come out and said that is going to be World War III. And again, you're going to have a lot of stories about this and the concerns, and it is a concern. I'm kind of hoping and praying on this one that China is pragmatic in their thinking. What do I mean by that? Russia's not a very good customer. It's just, they're not. They're not. I mean, whose business do you value more? Do you value the business relationship you have with the United States and our economy, or Russia? Russia, Russia, it's the gas station next to you that has nukes. I get that, but China has nukes too. So I'm gonna be cautiously optimistic on this one that China's not gonna head in that direction. And China's what is the guy's name here? Crying out loud. His last name is Wang. One of their diplomats, Wang Yi. I'm sorry, that's his name. I apologize there. And he's made several points, and he's actually going after the United States and saying that the United States are the ones that continue to hamper the peace process, and China wants nothing more than to have this all worked out. Again, they want to sell stuff. They want to sell stuff. It's what they want to do. They want to establish business relationships. It's not good for business. Not good for business. And again, this is why I'm going to be somewhat pragmatic. I'm hoping that they're going to be pragmatic. I'm going to be optimistic that they will be in their decision making. But again, you know, the old Reagan, you have to trust but verify. Many people around the country, this Biden trip, are none too happy. None too happy at the fact that they feel like Biden is neglecting the home front, and it's you can't argue with that point. You can't argue with that point. And you talk about the train derailments, and we continue to have stories coming out of Ohio. Another story comes out this weekend. There was a pipe bomb that was discovered near Conrail tracks in Northeast Philadelphia. We've had several train derailments, and again, I'm not a big believer in coincidence. So what does this mean? This is a bit of a concern, don't you think? Again, many people as well. Rightfully so. Rightfully so. None too happy about what's happening at the border, myself included. We have over 100,000 people dying every single year, drug overdoses, the issues that we have. Again, you know, where are we on this? Nowhere. So the concerns, again, we try to be equal opportunity bashers here on the program. The concerns, people on the right, justified. They have a right to be upset. Anyway, this is it's another "see, I told you so." Yes, we talk about all this debt ceiling shit that's in the news all of the time, and they got to come together and the problems. And I've pointed this out on every occasion. I pointed this out. Again, you know, the funny thing is, popped in my head. I remember when I was on air doing a guest appearance on a radio show. I was on a bridge leaving Harry Potter World at Universal Studios. I on vacation. Again, we lived there. The kids from Florida would go for the day to Universal, and I still got to do my work. You know, still had do radio shows. So I'd be like, babe, I got to go over there. You know, where it's a little bit more quiet, and I gotta do a show now. So doing an appearance at this point in time. I remember David Gregory was the host of Meet the Press and doing an interview with Obama. And I remember Obama put out talking about Social Security and Medicare and people not getting their checks and debt ceiling and not making good in our debt. And I'm like, we can't. Section 4, 14th Amendment, Constitution. The validity of the public debt of the United States authorized by law shall not be questioned. This provision was adopted to ensure that the federal debts incurred to fight the Civil War couldn't be dishonored by a Congress that included members from former Confederate states. The public debt clause isn't limited to Civil War debts. As the Supreme Court held in Perry versus the United States, 1935, it covers all sovereign federal debt, past, present, and future. The case resulted from Congress's decision during the Great Depression to begin paying federal bonds in currency, including those that promised payment in gold. Bondholders brought an action in the Court of Claims demanding payment in currency equal to the current value of gold value of the notes. The justices concluded that Congress had violated the public debt clause and that its reference to the validity of the public debt was broad enough that it embraces whatever concerns the integrity of the public obligations. Now, what does this mean? We can't default. Our Constitution says that creditors have to be paid. If they're not paid, they can sue for relief, and guess what? They're going to win. Those who warn of default confuse debt payments with other spending obligations. A failure on the part of the United States to meet any obligation, whether it's to debt holders, to members of our military, or to Social Security recipients, is effectively a default. That's what Janet Yellen said. No, it's not. No, it's not. It's not. So let me give you an example. If you don't pay your landscaper, do you default on your mortgage? No, you do not. Authorized and even appropriated spending isn't public debt. For constitutional purposes, promised benefits from Social Security, Medicare, and other entitlements aren't even property. Again, I wrote about this. We talked about this on the radio show several weeks ago. Fleming versus Nestor, Supreme Court case. Okay. Guess what? Congress can reduce Social Security. They can increase Social Security. You don't own it. You don't own it. There's no property there. When lawmakers were drafting the 14th Amendment, they revised Section 4's language to replace the term obligations with debts. The Treasury ran out of money. The constitutional obligation to pay bondholders would trump all statutory obligations to spend. Ms. Yellen also said that Treasury systems have been built to pay for all of our bills when they're due and on time, and not to prioritize one form of spending or another. Yeah, but that's just not true. The Treasury Department conceded in 2011. That's when I was given that interview on the air. The government's fiscal machinery certainly could prioritize payments to bondholders, and the Federal Reserve prepared for such a contingency. There's no question there'd be enough money. We collect what? We collect almost a half $500 billion a month in tax revenue. That's what 55 billion in debt service a month. So there's more than enough money. There's more than enough money coming in to pay the debt. Okay, this is why this entire thing, we always kind of go over, the narratives and the bullshit that's being pushed on you. By law, United States Constitution, bondholders will be paid. This is when we start talking about, it's essential services or essential workers and all this stuff. It's the only ones that are going to stay on. I've always been my opinion. That's the purpose of government, is you only have essential workers and essential services. Everything else we can probably find, outsource it, get rid of it. Just saying. Anyway, have a great day, everybody. WatchDog on WallStreet.com. WatchDog on WallStreet.com. We'll see you.